If gold goes from 2,000 to 2,500, what I just talked about, companies going up by 500-600%, it happens in weeks and months. That's it. And then the opportunity is gone.
One stacker on a journey to find silver. International Stacker.
Can you tell me a little bit more about mining companies? What different types of models are there? And what's the biggest threats or risks? And what's the biggest opportunities?
Mining companies, there are four basic kinds of them. The exploration companies either have nothing. They literally bought a piece of land. Like you can buy a piece of land. And they just start to drill it. And it's binary. It's either they strike something or they don't. So you're taking a lot of risk. And when you own an exploration company that hasn't proven anything, that's called grassroots exploration, you're literally taking the biggest risk. You are not an investor. You're gambling that these geologists are right about something. So I don't do those. Then you have exploration companies who have already found the deposit, but they think that either the other team that drilled for it in the past got it wrong, didn't look at the right data, didn't understand the data, whatever. They're trying to prove that whatever's beneath the ground is much bigger than what they bought. Let's say they bought an existing resource, but they think it's much bigger. So in that case, you're taking less of a risk because you are buying stocks in a company that does have a deposit, but you just don't know its size. So the speculation here is that, man, this could be much bigger than originally thought because we have so much better, modern technology today. It's so much easier to drill and really exhaust what's beneath the ground. The third type of company is a developer. So they already have such a nice deposit that it's actually economic to raise money and develop it into a producing mine. And so in that case, much lower risk because hey, this company is going to become a cash flowing business in the future, or somebody's going to buy it. A bigger company is going to buy it. So those are the developers. Then you have the producers. The producers are literally leveraged to the price of gold. Gold rises, as long as their expenses stay the same, their margins are getting bigger. They either pay a dividend or they buy another mine with the profits. You are part of a living operational gold company. And then those are the four main ones. Then there's the fifth category called royalty companies. And those companies are much less cyclical, much less dependent on the price of gold, and much more dependent on managements getting a lot of royalty deals done. Historically, the royalty companies have been the best performers in the whole mining sector over time. So if you Google gold royalty companies, you'll find the top three dogs. They're on all the articles, or you can find the smaller ones that are on the up and up. So what I try and do, if I am getting into a position with either of these types of companies, is I call the company. I speak with the management team. I want to know them. I want to know what they're thinking. I want to know what their exit strategy. I want to really get to know them, because what I'm investing in, though it's a public company, it's a venture capitalist type risk. It's a really big risk. You have to get the timing right, and you have to get of this cycle, and you have to make sure that these guys know what they're doing, because at the end of the day, think about it. It's a commodity. Everyone's selling the same thing. You find gold, I find gold. We're all finding the same thing. It's not like we have anything proprietary. So what I need is for this management team to be my competitive edge. So I want to know these people are ferocious and are engaged in this company and are shareholders of this company. I want to do some real research and due diligence. This is not like buying shares of Amazon or something where you know what you're getting. Here, you can get anything from a bankruptcy to a bonanza, and that's the reason to do more due diligence when it comes to mining companies and take smaller size positions. So I keep it to 1% of my portfolio for any one company with a 40% stop loss. So let's say for $1 million portfolio, $10,000 per mining stock with a 40% stop loss. So the most I'll lose is 4,000 out of 1 million. And that's 0.4%. That's a risk I'm willing to take in this theoretical example, because the upside is I'm looking for companies that can do 5 or 6 times their current market cap. So you're either going to lose 4,000 or gain 60,000. And we're talking about not in years, but in a year or a year and a half. So it's not only that the risk is much smaller than the reward. In other words, it's a great asymmetric bet to take. To make 60,000 or lose 4,000, I'll take that all day. It's also the time capsule that it happens, because if gold goes from 2,000 to 2,500, what I just talked about, companies going up by 500-600%, it happens in weeks and months. That's it, and then the opportunity is gone. You have to wait for a whole new cycle. So you have to be ready for this. You have to allocate some funds in advance, and you have to wait. And once you get exposed to a mining company online with a friend, whatever, do your due diligence. If you've made a conscious decision, I think this is the one, or I think this is one of the 3, whatever, then you need to start building a position. And that's where a lot of people get it wrong as well, IS. What a lot of people do is they buy the whole position on day one. And that's just not a way to do it. If you have allocated 1% of your portfolio or $10,000 to a mining company, you need to buy a third on the first day and wait for the next news cycle. Let's see what they do. Let's see drill results. Let's see if they got over a regulatory hurdle. Let's see something positive, and you can increase that position and buy another 40%. So 3,000 in advance or 4,000 in advance, and then another 3,000. It also gives you a chance to dollar cost average down in case the share price starts to subside. If it goes up, then you did not build the type of position size that you wanted, but that's fine because you're making money. Okay, so it's okay either way. You have to realize it's never going to be perfect, but just don't think that this particular arbitrary day you bought is the bottom. And that's why I don't like to buy my entire position on day one. Okay, so that's a lot of like trading ideas, but I would say the one thing to do, call or email the company. Some of these companies, you'll actually speak with the founder or with the CEO. Ask them the good questions. Ask them like, what's next for the company? What's going to be the big catalyst? How much of the shares do you own? Are you personally right now buying? How does this compare? Who are your comparison companies, peer comparison companies? Let's see if they're cheaper. Let's see if they're more expensive. What else have you done in your life? Let's learn about you more. Do some research. Now, once you do a few phone calls like that, you'll be savvy enough where you can just look at a presentation and get an idea if you want to get involved. But I mean, this is the type of research you need to do if you're going into these types of companies. Now, here's where the magic happens, IS. If gold goes to 2,500, most of these companies are going to do well. So like a GDX or GDXJ ETFs, where it's a basket of these companies, they're going to do well. So at the right time and the right timing, a lot of these companies are going to do well just because there's so much buying pressure into such a small sector. So in a bull market, your job is way easier than in regular times. And I think we are entering into a massive bull market where it is going to be easier, but you should definitely, don't be indifferent about it. Do your research, make sure this management team is top of the class, that the operations are in a very safe jurisdiction, that they have the money to do the drilling or the development that they need. Learn more about them. There's a lot of ways to do it today where you can also join forums or chats and kind of throw these names around. People know them. Do the research. Go to conferences if you can. Now that the reopening is happening, because you'll see 40 or 50 booths of companies. You can speak with all these management teams and learn more about them. So the more you do research on this, the next cycle, be it 2, 3 years, 4 years, 5 years from now, you'll have so much data on your hands that you'll know exactly which companies you want to get involved with. And obviously, if you want to get involved right now, then start by doing some research immediately, because we are going to see big moves. We are already seeing big moves. With our newsletter, for example, on January 3rd, I wrote about our #1 company for 2022 to the readers of the free newsletter. That company went from $1.20 a share to $1.90. So we're talking about more than 50% in less than 3 months, while the markets have had their worst January and February since 1928. And this was a gold company. So if you do the research and find the right ones, it's definitely already game on for some of them.
All right, Lior, thank you so much. This has been a truly fantastic discussion. I know the viewers are going to love it, but I know we both got to run. So what are we going to say?
Catch you in the next one.
Catch you on the next one. Woo!
One stacker.